It is March 9th now in the morning of Tuesday. And after I take you through the account, I want to talk about inflation and why I am so bullish on the stock market right now and why I'm not afraid to catch yet another falling knife. So here's the account. I'm sitting at $140,000 right now. It was a little bit under 140, namely $1,700 below this just a bit ago, but there's been some pre-market Apple move, recovering some of my big losses today from the company. I'm going to quickly scroll through so I can get to the topic. You can see the symbol, the ticker of the options holdings first, then the strike price, whether it's a put or a call, the expiration date, number of contracts, and whether it's a sell or a buy. The number on the right in red or green represents the daily change in value or change in liability of the option contract. So I'm going to keep scrolling. You can pause your video at any moment to try to figure out the exact positions that I'm holding if you are interested in them. From the information here, you can deduct all relevant facts about these positions. Here again, I have the symbol, the number of shares, and this is the daily change on the right if you're interested. Now, you'll see that I've picked up a ton of Apple shares, and I've probably bought maybe $7,000 or $8,000 worth of Apple in the last couple of weeks. Just a few shares here and there, trying to average into a larger position. Today I actually bought 10 shares of Apple, and now they seem to be rebounding. I don't know if that will last, perhaps not. I think it's largely dependent on the level of the 10-year treasury there, 10-year bond. And if the yield of the bonds keep rising, I'm guessing that the negative correlation between growth stocks and bond yields will persist, and the growth stocks and tech stocks will continue to correct, probably another 10-20%, maybe 10-15% at the most, I believe. Realty income, picked up some more shares here. I'm going to continue to scroll down. Everything else was kind of neutral. Verizon's been doing very well, and also Ebix, right? I have a really big bet on Ebix. Some news on Ebix, if you're interested. They got an extension from, I believe, the NASDAQ, and they will be reporting their 10K or whatever on April 20th, I believe. Anyway, at some point in April, we'll have the full audited numbers, and they might even announce something before they're fully audited. So I'm kind of looking forward to these news. Apparently, they snatched a new auditor named KGC or something like that. I think it's an Indian company, of course, to handle their. It's an international auditor, and hopefully they do a good job. They mentioned that they have some really high-profile clients. Two of the ones that I knew were Citibank and Wells Fargo Bank. Now, I don't know if they're sole auditors or they're just part of a collective of auditors or whatever, or maybe they oversee some kind of international activities that these banks do. But if these banks are hiring them, that means they can't be that bad. They sport a unblemished record in accounting, so hopefully that holds up with the whole Ebix situation here, because I'm looking for it to be a really great trade for me and a source of maybe $5,000 to $15,000, which then I can either leave in Ebix or I can reinvest in something else. I only have one call option sold against Ebix, so that means that I'll be gaining from any value of the company of the stock that materializes, as well as suffering from any loss It's not going to be dampened through call options very much at all. All right, so now it's time to talk about inflation. Okay, so I listened to a very interesting interview by Michael Saylor from MicroStrategies. And hold on one second, I gotta turn off my heater, and I don't have the remote right now. And I'm not editing this out. So. All right. No edits. So I listened to this interview by Michael Saylor, who is the CEO of MicroStrategies, and he brought up a very good point. He has a really nice way of thinking about inflation, which is very similar to the way I think about it. And he brought up the fact that inflation is a very subjective phenomenon. Just briefly, I'm going to go over it. He talked about how, for somebody who doesn't have many expenses, maybe a teenager or a college student that has everything paid for them, and the only expense they have is, beer or premium membership on Tinder, that the inflation for them might look very different, right? And they might experience deflation if most of what they're spending money on is, subscription to music, like Spotify, for example, and Netflix or something like that. So they keep getting more value. Perhaps the prices of their digital good consumptions goes down, and so now they're experiencing deflation, perhaps. So the dollar goes further and further. But if now you're a family man or a family person, and you have to pay for your food and for bills and for housing, then you probably experience a higher level of inflation based on the basket of goods that you are aspiring to, or you look forward to purchasing. And so he makes the point that if you aspire to be very wealthy, well, then the things that very wealthy people consume or deal with are assets, right? So the higher you go up into the more expensive things, the more the inflation shows up. And if you look at stocks, he brought up specifically Apple, which is my largest holding, and he said, well, the dividend hasn't changed on Apple. Their earnings have increased maybe a little bit, but let's just stick with the dividend for now. The dividend hasn't changed. However, the market cap, the price of each stock doubled in a very short period of time. And so that would be 100% inflation, right? This hyperinflationary environment in stocks. Inflation, of course, is not even. It's chunky. It goes up, it goes down. But I think there's a lot of truth to what he's saying, and he put it in a very good perspective. Now, I do disagree with him about what to do about your cash in such inflationary environment. His idea, of course, is to buy a ton of Bitcoin. And of course, I differ on that view. I think if you're looking for a cash equivalent or something to store purchasing power, and you should go with a gold or some kind of digitized gold, like for example IAU or even GLD, if you can bear the fees, some kind of proxy of gold or something like that, or just pay for deposits. I don't know, but I think there is a much better way to preserve the purchasing power of your cash than Bitcoin, which is a speculative instrument right now. I would probably equate Bitcoin more to fine art, right? Something that has kind of subjective objective value, if you want to call it that, where, just because a few people find art and beauty and think that the painting of Picasso is worth millions of dollars, then that's what the painting of Picasso is worth. So if you want to buy and sell Picasso, you would be playing in that market with these people. So I think the same phenomenon is appearing with Bitcoin, I think that's because people are willing to pay for it, then that is why the price is the way it is. It's not because of some intrinsic value fundamentals. It's not because of um, its ability to produce a yield, right? It's not a farm. It doesn't have a yield each year. It's not a debt instrument. Okay, it's not a company that produces goods and turns a profit. Okay, so it's more like fine art, I would say, or you could think of it as a game or whatever. But I just disagree with his allocation on his free cash. All right, going into such instrument. Um, I mean, I think in a different interview, he's actually made that comparison to fine art, which I think is a much more appropriate comparison than Bitcoin to gold. Anyways, what got me thinking though is that he's totally right about the way he articulated the subjectivity of inflation, and for that reason, I think, since the money injections aren't stopping and they first apparently hit the asset markets, right? The people who get their fingers on that money in the beginning. Um, I don't see that trend reversing or stopping. So that's what makes me bullish, even more so on the stock market than I was before. I think that the annual, the return rates of the stock market in the years past, which has been 7 to 11% or something like that, depending on how you want to measure it. I think that is has been accelerating. I think it will continue to accelerate given the environment that we are in, with such credit injections all over the world, not just the United States, and the frantic um, clawing for escape from the currencies because of their massive devaluation on a yearly basis. So all kinds of things are getting bid up, even things that are hated, like commodities, which tend to have their prices in real value drop over time. But of course, commodity prices are very spiky and they don't always drop in a straight line. And this drop could actually be slower than the drop in the currencies they're denominated in. So now there's this massive, sinking, massive kind of melting away of wealth that's going on. If you want to hold on to these types of things, and the only thing that's kind of a safe haven from this phenomenon would be assets. And these assets traditionally have been things like real estate, businesses, ones that operate well, turn a fair amount of profit. And you need to, by the way, you need to turn out quite a bit of profit enough if you want to be able to maintain the wealth, right? You need to be able to outpace the inflation for the wealthy, if you want to preserve your purchasing power. And gold has done that job traditionally fairly well. So, of course, unevenly throughout the years. So I'm kind of orientated in that direction. Okay, so right now, of course, you have the value stocks rotating to the spotlight, whereas the tech is swimming out. So there's a massive rotation happening at the moment. And I think, however, it's near the end because I judge it by the amount of people that are so hyped up and how much in the spotlight this trade is. People started talking about it weeks ago, and now every single person and their mother has bet bigly on this trade. And once everybody is on one side of the boat, there will be some people recognizing this fairly soon as the boat shifts very violently and people scramble to get back to the original side of the boat. So there's going to be some kind of rebalancing back into tech. I just don't know when it will happen, and of course, and I don't know how big it will be. But I'm guessing that Apple is not going to be going too much lower. I don't think it will go below 105, for example. If it does go below 105, I will be making some crazy moves. And those crazy moves are sell off a lot of my portfolio to buy Apple shares. And if Apple shares continue to drop, let's say below 90 or something like that, or in the 90s, I may sell my Apple shares in favor of buying call options on Apple. So it's going to be the mother of all knife catching moves ever if Apple drops that low. I highly doubt that that will happen. But if it does, those are my plans, and you heard it here first. So if you really want to see some craziness happen, then you should hope for Apple to drop to the $90 range. Okay, I'm gonna finish it right here. This has been a really insightful interview that I watched. I'm not gonna recommend where to watch it. You could just look up Michael Saylor. He's been talking about the same thing in a few interviews as of late. I do think he's a very, very intelligent guy. He has a very clear mind, and I respect him a lot. I just don't agree with the Bitcoin move. So anyway, I just want to put that out there. But it's very interesting. Go look it up and listen, and I think that it's going to add a lot of perspective. It surely helped me think clearer and reaffirm my bullish stance on what's going on here. All right, down with the dollar, up with the market, right? Okay, peace.